Good morning and welcome to the Velocity Composites PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Andy Beedon, Non-Executive Chairman. Good morning, sir.
Thank you, and welcome everyone to our presentation for the full year results of 2022. I have with me today, as well as myself, John and Adam. And if we just move on from the bios. So I think the key message for 2022 is this was a year of investment and development within the business, and ultimately leading after the year end to an announcement of our largest contract to date, which was a $100 million new deal over 5 years in the USA. That contract starts during this current new financial year, ramping up to full production by the end of the year. What has underpinned the success of winning that business and hopefully winning more business in the future is the execution of our current strategy, which has involved really a three-pronged approach. The first is engagement at a senior level within our customer base and also supplier base, where we are able to explain and pitch and articulate the service offerings that we can now provide to the composite aerospace industry in particular. It is the creation of a full business plan and total cost of ownership for each new customer, which sets out both material savings, cash and inventory management, sustainability advantages, quality advantages, labor efficiency and productivity advantages, and adopting our services within a specific plant. And then we do a detailed analysis for the customer, and then we come back to that original business plan and pitch, so the whole thing becomes validated. And that is the process we followed for the new business in the States, and what we now follow for all customers, whether it's expanding on a current contract or looking at a brand new customer. And underpinning all this has been some heavy investment in terms of manufacturing technology and supply chain systems and services, and of course the people behind that. And you'll look that both at board level and below board level, we have invested in people who have significant credibility within the industries that we serve. In terms of our targeted businesses and where we look to operate servicing what we would call either OEMs or the large tier one manufacturers in the composite materials industry, particularly aerospace, but we can also service non-aerospace who are using similar types of materials. We now have a new facility in the States, which we have set up. It is very close to entering production in the next couple of months, and that is a huge investment, which is to the benefit of ourselves as a business, our customers, and of course our investors. And we continue to have development in business within the UK, but it shouldn't be lost on people that the size of the UK to the size of the US market, there is a significant difference in those scales, but we continue to look to grow in the UK and also in the future in Europe. In terms of the market, there is now showing significant growth opportunities again in the overall markets and the use of composite materials, particularly in the aerospace industry. And we're seeing that recovery coming out of COVID, where production was either stopped or reduced very significantly, you're able yourselves as investors to go and validate analysis around the growth in the markets, looking at data that comes from Boeing or Airbus or other OEMs in, say, the military side, and how all those project very significant growth in composite focused aircraft going forward. And even during this period of investment and future growth opportunity, we continue to look to manage cash very tightly. We've delivered this new facility within our current resources, and just as we look to help our customers in terms of cash and working capital management, we ourselves apply the same disciplines to our own business. So I will now hand you over to Adam, who will just give a little highlight of the financial results that are being released at the moment, but I just emphasize that the important messages are around this was a year of investment, which now leads into 2023 and beyond, which are years of significant growth.
So thanks, Andy. So as Andy's just pointed out there, these are the results for FY22, so to the year ended 31st of October 2022, and therefore don't incorporate any of the US sales contract, which is a post-balance sheet event. However, that there has been a sales increase of 22.4%, taking revenue for the year to 12 million as the market begins to recover from the pandemic, along with some of the UK contract wins in the year. However, gross margin has seen a slight sort of underlying margin has decreased slightly from the previous year, so it's moved down to 23%, which is largely a result of some of the cost inflation coming through. That said, we've had conversations with our customers and obviously looking to pass some of that cost inflation through, and that's been sort of positively received, and we anticipate that sort of that will return to a more normalised level in 2023. In terms of adjusted EBITDA, we've got the number of loss of 0.5 million is consistent with the previous year, and that's actually a really good effort, despite that obviously we've had an increase in volume, but we've also had put a significant investment in overheads in the year to help us sort of, I suppose, deliver that growth in FY23. So actually the maintaining that EBITDA level in terms of following our investment in overheads is a fantastic achievement for the business. And going forwards, we anticipate that overhead base will a good chunk of that overhead base will support our growth in FY23. In terms of our cash position, as Andy's already mentioned, that we've had to really monitor our working capital position very closely, but we've also at the same time invested in sort of both technology and in our growth over in America as well, which you can see there through our capital expenditure. So, but there has been an increase in capex in the year, but that's obviously to support the development of the business.
Thanks, Adam. It's John here, just wanting to pick up on some of the strategy points that Andy touched on earlier, and really sort of explain how some of those have had a bearing on our current and future business development opportunities. And really they're three individual points there, but they're all very, very much linked and intertwined really on how they change the sort of perception of Velocity with customers and help us to engage on a more strategic level with customers as well. So first there, as you can see, the one of the big changes is how and the level that we engage with customers. So I give some of the changes at board level and below board level. We opened up those relationships to a much higher level with our customers, really at the C-suite and the VP level, to really get these programs supported at the highest level. And again, I think historically where we've gone at more sort of middle or lower management, there's a lot of work to do to engage with all our, the customers and the all the levels and all the functions within each customer to get some of these business improvement opportunities supported. Whereas now, as from the last year where we've engaged at a high level, we get a more senior level sponsor that really cascade down as a significant, well-supported initiative within our customer organisations. And as we say, it speeds up decision making. It gets the support that these need, and it gets the awareness of the benefits they bring throughout the organisation. And what helps to drive that as well is the next point there around the TCO business case. And this is where, rather than supply ultimately the smallest denomination, the kit prices to customers, we actually get a lot more involved, use their data, work with them collaboratively to develop a fully costed TCO model, which shows what their previous spend would be doing it internally and providing the service themselves, and what the future state would look like working with Velocity, and shows clear benefits across those key points there. It's not just about the kit purchase price. There's a whole host of additional benefits, wider benefits, but actually compare that to actual performance, previous performance with customers, to show that total benefit across all those key areas within the business. And again, this is now a very well templated model. It's a very well received model with customers. And our aim really is to get this document to the point where you can change the heading on it, and it becomes the customer's internal business case as well. So a lot of work's gone on to develop that, and obviously linked with the more senior level relationships with customers. And then finally, underpinning all that is our continued investment in the digital technology to actually really digitize the whole front end of the composite supply chain, to really look for and deliver key benefits around the main points there around not just the efficiency that the kits that are cut, but also the whole demand management piece, the material management and material ordering piece, standardization, logistics optimization, traceability, quality performance, all the key areas that Velocity service brings, and actually digitize that under one very powerful system to help deliver more compelling business cases, better information into the senior levels. And really what we're seeing is all these three combining to give a real compelling, very well supported, senior sponsored business case with our customers that they can decide quickly, and then move on to the contract and implementation stage. So hopefully that's given a bit more colour around how that strategy has paid off as we engage with more customers at a higher level. The next slide, really just talking about our US market entry, and this is something that we've been engaged in for a while. We've talked about it obviously previously. It's been obviously hampered with COVID and the inability to travel, but obviously as that came off, those restrictions eased sort of end of 21, and we got into 22 proper, we could re-engage that strategy. And that always focused on entering an area that's has a significant aerospace cluster, lots of potential customers, and that was always looking at the sort of Atlanta area, that sort of southeast cluster there. And what we've done is engage with key customers and got to the point with a launch customer now to sign a significant contract, and linked to that is the standing up of our facility in Alabama to support not just that initial contract, but the other business development activities that we have ongoing in that part of the world. And I think having a facility also transforms those other business development activities, because again, engaging with customers, you can have those conversations, but without a facility, that was always the sort of challenge. Now we have a facility, people have seen that facility and the approvals are gained, and that facility moves into significant volume production. And again, that supports all the other new business development, and obviously also supports the delivery of that key contract with our key customer. So just a bit of an update in terms of that, the FAI process, the process to verify that our kits are in line with the customer's own previously supplied kits is ongoing and on track. And the sort of contracted plan with the customer is to deliver all that business transferred by Q3 calendar year 23. So as you can imagine, a lot of work going, and I think we pick it up on the next slide too, really about having this asset now, and it's a fantastic asset. It's a great facility. The training has gone well. The transfer of that knowledge from Europe to North America has gone well, assisted by the fact that we've digitized a lot of it, and we have some really good standard processes that we can export quite relatively straightforwardly. But it's very close to our launch customer. That will obviously aid the delivery of that project. The capacity wise, it's been scaled obviously to support that initial launch customer, but also other customers in that part of the world as well. And we have a great plot there. We have good relationships with a landlord who's been very supportive, and that facility can deliver the current customers program and more, but also even further expansion is required. We've got a decent plot there to utilize. That site has been stood up with its own team, US team, supported very well and successfully by lots of knowledge transfer and people transfer and support from the UK on rotation, which continues as that plant rolls through its stand-up processes. And as I say, the team's there now to start and deliver on the FAI process and move into rate volume production. And as I say, the processes it uses, the digital manufacturing systems that we use in the US are identical to the UK. The approvals, the processes, it's all identical. And to stand that facility up has been a great effort by the team. And we look to moving forward into that detailed contracted transfer plan with the customer and into volume production. But I think we're pleased with the facility, the location, and the further opportunities around that can be supported from the team and the infrastructure there. And so that really brings us on to the focus of this year, building on the sort of huge steps forward we made in FY22. Clearly, scaling is important, and we want to absolutely focus on completing the launch customer project in North America, successfully completing FAI, moving into volume production, and delivering the plan as is for that. Also, we do want to look at other opportunities and continue to progress other opportunities there on a targeted basis, utilising the strategy and utilising the infrastructure that we now have in there as well. But also, in the UK, continuing with the activities there, both in the aerospace and the non-aerospace applications, which we've discussed. There's still opportunity in both locations, and they will utilise the investments made to deliver on those. As Adam said, also the focus just from the calendar year phasing of discussions and agreements with customers, we'll implement some of those new pricing activities with customers to look at mitigating some of those inflationary pressures, particularly around people and energy. Energy in North America seems to be a bit more stable, and probably something similar to what we were used to historically. But obviously, energy costs in Europe have been significant, and we're obviously looking at ways to mitigate those costs, but also looking at ways to pass them on where they can't be mitigated. We're obviously going to continue to look to ensure that the resources are in place where they need to be to deliver on our projects, and really continue with the full embodiment of the US subsidiary into the wider group. As Adam said, cash obviously continues to be managed effectively across all contracts and projects, and really align our business development not only on the key opportunities that we know around aerospace, particularly in the large opportunities, in North America, but also non-aerospace opportunities as well, to ensure that we stay tuned into any evolution within our industry, particularly as we look at urban air mobility. We've talked about some high-end automotive, alternative fuels, and all the other developments to the wider composite supply chain. I'll hand you back over to Andy to summarise.
Thank you, John. Thank you, Adam. And just a summary, really, that the key element here is that our global market, particularly in the areas that we're focusing on, is growing. That means that we've got existing contracts which will continue to grow over time as production rates increase. And don't forget that our business is all underpinned with long-term contracts, and we're now seeking to add new contracts, some of which could be quite significant, as the one that we've just added, and is yet to be baked into the numbers going forward. Entry into the US market is critical in terms of our ability to scale much more significantly, given the size of the US market, and individual customers are much larger than in the UK and even in Europe. And that split of business also is more even between defence and civil aircraft, both of which now are expected to grow significantly for different reasons. And we are at a point where the facility is there in the States. We're working through the pre-production activity, approvals, everything else, but gearing up to move into production in March, i.e. the back end of the first half of this current financial year, which ends at the end of April. The strategy and the people and the technology and everything else is now coming together. And you're seeing that with the engagement with senior executives within our customer base. If you look at our own board, that has been strengthened and revamped with some senior experts within our industry joining our board to help support us, both from a technology point of view, oversight, but also their own contacts and relationships. That development of a business case modelling, which comes from many years of experience and credibility, now able to be rolled out onto large facilities and be validated through engineering work. And as I said, the technology has taken many years to develop. There is therefore an absolute high confidence, not just of growth from where we are, which was a 10-12 million with the new contract that has been won, but the opportunity to grow further. Again, new business and these existing contracts growing as the end demand and end production increases. And we therefore do have new business opportunities that we're evaluating and working on at the moment. And we have a team that are always working on those things, and we've invested in that team, and therefore, absolutely, the prior year result shows a level of overhead which is more than was needed for a £10 million business, but will support a £30 million business. And I'll come back to some of the questions which are pivoted around some of those points in a minute. So I'd like to thank you all for listening to the presentation side, and in a minute we're going to move to the Q&A side of the presentation.
Andy, John, Adam, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed by your investor dashboard. Andy, John, Adam, as you can see, we have received a number of questions throughout today's presentation, and thank you to all the investors for submitting their questions. Could I please ask you to read out the questions and give response where appropriate to do so, and I'll pick up from you at the end. Thank you.
Okay, so what I'll do is I'll go through the questions and I'll bring in Adam and John as appropriate. So the first question is a 3-point question, but it's on the US, asking, what's the staffing, how is the US going to be funded, and an obvious point that, okay, the US has started with one very big customer, which obviously we're reliant on. So let's just take that third point first. That customer is a 5-year agreement, not a 6-month agreement. So it does underpin the investment in the business over the next 5 years. And normally, when we have these long-term contracts in the past, they have all rolled over at least once again, and usually lead to even more business longer term. So, but as John and I have said, we are working on other opportunities in the States, and this facility has been set up to absorb other customers from the same facility. So we would expect it long-term strategically to be servicing a multiple of large tier 1 customers, but it is underpinned with that 5-year contract. We funded all this so far through our current facilities, cash, equity and debt, and we've costed that we can do that from where we are today. I noticed a couple of questions about funding. The only issue for Velocity in terms of what sort of funding it might need going forward is if we have a number more of very significant contract opportunities that start to come through, and we need to look at how the capital base would work in that case. But however, where we are today, you can see the facility is built, and we have 2 types of funding in working capital that we can draw on. The first type is traditional banking, finance and supply chain invoice discounting. And the second is that these large customers also provide supply chain finance themselves to support their supply chain. So GKN, which is the customer here in the States, provides a specialist facility which enables us to be paid very rapidly under this contract, and that has all been built in to the contract. And in fact, the onboarding of inventory and everything else in this contract has been built into the actual terms to enable Velocity to take on the contract over this year. So we've worked very closely with the customer, and we do work very close to the customers in terms of how do you finance these large contracts. And the staffing, we're already onboarding staff. I think, John, what would you expect just at full rate the US staffing to be? However, the key point is that they're really all in production, aren't they? They're not. We're not talking about any major overhead, administration overhead here. It's nearly all production direct costs, which are built into contract costs.
That's right, yeah. And again, the other advantage of having a digitized system is we can share a lot of the back office stuff with existing people in the UK. We don't need to sort of completely duplicate everything we've got in the UK out in North America. So again, we can be flexible where those people are and how they're supported. But yeah, the direct staff will grow as the contract transfers across. We've got a sizable team there already, and yep, it is supported by the UK, but that'll reduce as the site evolves and develops through the project.
Is there about 30 people in the direct side?
There will be about full rate, that sort of level, yeah.
So given the moment we have around 70 odd staff last year, so we're sort of moving to around the sort of 100, around that level consolidated with this contract being absorbed. Yeah, which is actually below, I think, where we were pre-pandemic on a lower level of revenue, isn't it, John?
That's right.
Yeah.
The developments we've made and on digitizing the processes help to streamline it for us as well.
Yeah, so that sounds to me like a sort of almost a 20% maybe saving, like for like, pre and post pandemic in overall labour costs.
Yeah, and that's the direct labour, but also the back office has been streamlined as well through VRP.
Excellent. I think another question came through on the funding. I think we've answered that. We've got various forms of funding in terms of contracted sales that we've already committed to, which are around the supply chain side, and that we work with customers on that as well. So as we onboard, and then inevitably, these contracts are profitable. We expect to move into a net profit in the business and a profit after tax, and that will generate a net cash flow as well, which can give us money to reinvest in the business and growth too. We've had a question on what are the new contracts, and I think we can't disclose anything at the moment. Everything's always speculative, but we have some smaller opportunities in the UK. They are not on the scale you've seen in the States. And then we have some large opportunities in the States, which could come through piecemeal, or they could come through like GKN did in the end, which is a larger, one-off big contract covering an entire facility. But we do have quite a lot in the pipeline that we're working through. Obviously, we have to focus resources because it is time consuming and takes time for us to get to an agreed business case with customers. And of course, they have to buy into that. But there is a lot in the pipeline that we are working through at all different scales, from the $500,000 a year type contract to potentially one at the size of what we've seen in the States already. And the UK market, because someone's asked specifically about the UK market, we do expect to grow. It's growing modestly, I guess, out of the pandemic. We saw that 20% growth last year. We would expect potential for double-digit growth again this year, but it is, it's not doubling or trebling compared to where it was. And so modest growth potentially in the UK, very significant onboarding of new business in the States is the structure that we've set ourselves up for.
There's just one comment there, Andy, about dependency on one customer.
Yeah.
And I think, yes, certainly our launch customer by its nature will be, our sole focus for a while and his key project to deliver. But I think it's worth just noting that even this one customer, their order book is made up of numerous aircraft platforms, both civil and defence. So it's quite a nice, diverse order book, varied in terms of the end use and the primes as well. So yeah, it's one customer, but it's 8-10 key projects that make up that one customer. Yeah.
And the next question, which we should just really clarify on, someone's asked about, is the fact that Velocity is a UK listed business, does it prevent it from working in the US defence and space sector? And the answer is no. Half of the new contract in the States is in that sector and in critical supply chain elements of that. So, for example, GKN are world leaders in the helicopter blade technology, and we are supplying our services, therefore, into that market with end customers such as Sikorsky. And the space sector would be the same. It's under the same protection. So we are able to supply customers that are working in those critical areas as we are. We've had to get the right clearances and qualifications but we do already operate in the defence sector in the UK, and we have received very positive support from both OEMs and our customer in the States. There's been a couple of questions about would we have other equity raises. The need for additional finance would come from looking to build the business out strategically longer term, and that would therefore come with even more contracts and an increase, in the contracted business from where we are today on a material basis. So yes, any business that might expand rapidly beyond where it is may look to balance its capital base between debt and equity, but it's not, and that's really where we would come from. Someone's asked about Pacifics, EIS, VCT. We're not at a point to discuss any of that or what it could look like at the moment if we needed to. Our focus is winning new business and also critically implementing and delivering on the contracts that we now already have, which on their own show a significant increase in the business. John has asked us what our USP, what we would consider our USP to be. Mm-hmm. Would you like to answer that?
Yeah, and I think we touched on it in the section on the strategy. It's the uniqueness of Velocity is our specialism in that part of the composite supply chain to really use some clever digital technology, some very honed processes to deliver not just real double-digit savings to our customers by waste removal, but also deliver growth to Velocity, all paid for by removing that waste and eliminating it. So there's we're not a software house that just can give customers the ability to do it themselves. We're not someone that will just do what the customer does, but outsource it. This is a very different proposition to customers where they can outsource. They can, get rid of all the issues around managing their own materials and, kit manufacture. They can make savings and significant benefits by doing things better. And, they can lose their whole inventory and really, outsourcing in one swoop to a really technology-driven service provider who can continuously deliver those products as they're required, right into the point of use. I noticed the question sort of goes a little bit further and says around, why would we not supply the composite components for our customers? And I think that's really, we've really become a competitor then to our customers. I think we've carved out our niche space within the supply chain. We're not a material supplier, we're not a component manufacturer, but we sit between those two rather different parts of the supply chain and deliver our services and benefits, hopefully on a much larger scale in the coming years. And I think the key word there is, scale. As we scale up, things get a lot more. The technology can be scaled very quickly. We've done the investment on the development. We have a really good product and a way of getting that product to customers now, and we just want to do that in all the areas where our customers exist.
Yeah, and someone's asked about what are our top four customers, or what percentage are they to revenue. As we move towards obviously focusing on the tier one suppliers, absolutely our percentage of our larger customers is a significant percentage of our sales. However, we should remember that it's also underpinned with long-term contracts where we have price flow through, and the customers are committing volumes that they have on facilities into our business. So yes, we do have a small number of large customers, but the way that we are now set up with those customers is commercially, if anything, a stronger position than maybe we have been in the past. and they rely on as much as us as we do on them. And that gives us the opportunity to scale through other larger contracts with other larger customers, particularly in the US. Someone's asked about currency movements. The main sensitivity is around the dollar and sterling exchange rate. And the largest will now be the fact that and we all know that, a large proportion of our sales and activities will be coming from the USA. So, we have quoted some numbers in dollars rather than just in sterling, so that people can see what that is. And then it's for others, I guess, we have our own views on to view what the sterling dollar exchange rate movements might be in the future. But we do believe they're operating in the States, operating in dollars in those contracts, it has a strategic benefit to us, and versus being just operating in sterling. So that's all the questions so far that we've now covered.
Andy, John, Adam, thank you. And I think you have addressed all those questions you can from investors. And of course, the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Andy, could I please just ask you for a few closing comments?
Yes, well, thank you, everyone. So I think that the key message that we said, that we now have moved from a significant level of investment around our services and technology and people to now seeing that investment move into scale, a large contract in the States, other opportunities opening up for us, and having a key asset in the States as well. So we see that there is a lot to deliver on what we've already won in now and have in our contracts, which they themselves have upward pressure in terms of long-term volumes. So we shouldn't forget that each of these production facilities where we have these contracts are more likely than not to increase volumes longer term based on industry forecasts. So there's a lot that's already baked in terms of opportunity through our contracts, which will deliver very significant growth from where we are today over the next 2 years, with the potential upside of more new business laying on top of that. And I think that's the key message, that we have for investors today. And we thank those that have, hung in with us through that investment cycle and some of the more difficult periods of COVID. And hopefully now we can all work together to deliver on what we all see as the company's huge opportunities going forward.
Andy, John, Adam, thank you for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Velocity Composites PLC, we'd like to thank you for attending today's presentation. Good morning to you all.